Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a bounce in Chinese equity markets. Share prices in China rose in trading yesterday after a series of government measures appeared to have their intended effect. But many analysts are warning that markets could well have further to fall because the valuations of many small companies are still too high. The Shanghai market is still 15% above its level at the start of the year, despite the recent carnage. In Washington, a senior Fed official pressed the 8 large American financial institutions to shrink. As standards for systemically important firms tighten, he said, they will come to realise it's in their best interest of their stakeholders to get them smaller. Slowly but surely, the regulatory vice is starting to close on too big to fail banks. Those same banks are expected to report poor second quarter results next week after conditions have turned unfavourable for bond traders recently. In fact, things could get even tougher for them as analysts see bond markets complacent over the threats of rising rates that they pose to investors. The bite has already started. Staying in the US, the level of jobless claims last week rose to their highest level since February, suggesting some slowdown in American labour markets. In Australia, their job market looks to have stabilised for now, but some economists still see risks of a rise in their unemployment rate later in the year. Overnight, the IMF revised down its latest forecast for economic growth, saying things are slowing in emerging markets but picking up in the advanced economies. They're bullish on prospects for the US and say Greece will have little impact on Europe. They're also not so worried about China, despite the recent share market volatility. Still, their overall expectations of expansion are the weakest since the GFC. Overnight in Europe and Greece, there was only more hot air. In New York, the US Treasury 10-year yield benchmark recovered much of the prior day's declines, rising to 2.27%. Locally, our swap rates were unchanged yesterday, but will likely rise today following the Wall Street signals. Oil markets are holding at lower levels today. The US benchmark price is now just under $53 a barrel, and the Brent crude is just under $59 a barrel. The gold price is also holding its recent low, now at $1,160 an ounce. The Kiwi dollar opens today marginally firmer against the US dollar at 67.2 US cents, 90.4 Aussie cents, 61.1 euro cents, and the TWI is at 71.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.